Hey, what's good, YouTube? My name is Chris Hendricks, back with another video. Today, we'll be looking at basically my overview for this week. So, the first chart that I'm gonna kick off with is Euro against the Australian dollar. But before I get into it, I'll also give an update about last week's NFP, the reason why it sold off, and so on. So before we get into that, I just want to quickly explain the setup just so we can be on the same page before I analyze further setups. So I'm just gonna erase every single thing. This is the daily time frame. Hold on, let me just do this. So this is the daily time frame. As you can see, lately we've been having an uptrend dating back to sometime last year, but we're not gonna really go back into the past. We're just gonna focus on what's happening right here, which is the current market. So the first thing that we're gonna do is place our lowest point. As you can see, we had this nice support right here, which we had about 2 touches, which should give you some sort of context that this was a huge support where it was an uptrend. You can see it broke this line right here, which was a previous resistance, and we went back down to retest on it twice. So this gives us the impression that the market is still gonna continue up, which it did. So with that context, we know now we're looking for bullish setup. So we had this previous high right there. Let's just keep that in the picture. And as you can see, now we are within this channel and we can start working within. So I'm just gonna scale down to the 4-hourly time frame. And see what we have. So you can see the price. Remember, the price moves in 2 phases, which is either an impulse or correction. Impulse, correction, impulse, and so on, right? We anticipate and look out for corrections so we can catch this up momentum. So that is what we basically trade. So let's figure out our structure. After figuring out all the support and resistance areas, we figure out the structure. We're gonna grab our trendline tool, and from this point right here, we're at a nice impulse followed by this huge correction, right? So remember, after a correction, it's either we get an impulse, which is in this case a continuation, or a reversal. But in this case, we got an impulse. So before all of this happened, we figured out that the structure support is right there, and we have our resistance, and now we have our support. So with that said, we need to figure out the amount of touches on our support, because in our theory, the third touch of a structure always has the highest probability. So we'll be looking forward for the third touch, and once we get rejections on that third touch, that's when we start looking forward to placing our entries. So as you can see here, we had our first touch followed by a second one and the third one. Let me just use arrows because they look much better, to be honest. So you can see we had about 3 touches on our support, and the reason why I didn't extend my trend line till this point right here, because I don't really count this as one of the touches on the support, and that might surprise you, but the reason being is because the overall picture looks like this. So it was just an upwards movement where we had our first real rejection right there, or pullback, to create the first touch on this major support, right? So that's the reason why I didn't extend it all the way there. And if I can just switch over to the trend line, I mean the line candlesticks or line pattern, you can see very well that the actual touches that have significance are these three touches right there, because it shows a great pullback and it just forms a beautiful structure, to be honest. So what we're looking at right here is basically a continuation flag or correction. And when we focus on the third touch, because that will be where we will be placing our buys, right? So I'm just gonna scale down to the third touch and look at everything in great detail. So as you can see, the price on its way to the third touch, the last bearish candlestick or red candlestick lost so much momentum compared to the previous ones. As you can see, these were huge, but as they were going, they kept getting smaller, and until this last bearish candlestick, which is the smallest. So what that tells us is that the market is losing momentum or power to continue pushing to the downside. So this would have been our first rejection confirmation, like, okay, now the price is about to reject, we should focus more. And then take a look at the next candlestick. It was a bullish candlestick and it has so much momentum to the upside, trying to correct this down movement, but it closed as a smaller candlestick. Let me just zoom in a bit. It closed as a much smaller candlestick compared to how it moved, but then we are still in the green. It's still a bullish candlestick. So remember, this is the 4-hourly time frame. So in my opinion, I would have scaled down to the 2-hour time frame to really confirm what's really going on the third touch. And in the 2-hourly time frame, we have a better representation of what the price is doing. So you can see the bearish candlesticks, though, on their way to the third touch, they kept getting smaller and smaller and smaller until it gave us this nice, perfect reversal candlestick, right? As you can see, it has zero strength to go to the downside or either way, which really formed as a reversal. So the following candlesticks were bullish, and the second bullish candlestick had so much momentum. With that said, this second bullish candlestick would have confirmed that we are going to the upside. So we would have placed our first entry right there with our stop loss right below the lowest point of the third touch, which is these 2 wicks. So we would have placed our stop loss right below those 2 points. And if we scale up, you guys can see the price never went back below to our stop loss, and the price just scaled up. But you can see this first pullback right here next to our entry, we did go into a red, but you can see our price, our set stop loss didn't get triggered, which is a good sign. And I wouldn't be risking much profit, capital at that point. I don't consider that as being tight, as long as you put your stop loss below the lowest point of your entry. In this case, it's right at these 2 wicks. That's the lowest point, and yeah, you should be good. You wouldn't be risking too much of your capital as long as you're trading safe. So that would have been the setup for Euro AUD, where we have our stop loss at the previous high, which was this point. As you can see, the price nearly reached it, but I'm not chasing take profits. Would have exited right after seeing this pullback right here, even though the price went back up, but would have exited. As you can see, we're just a few pips shy from the actual take profit, but the setup really played out well. And the core strengths of this setup is that we followed the simple method of identifying an impulse, which was followed by a correction, where we analyze this correction or corrective structure, anticipating which way it's gonna go. And in this case, it was a continuation, so we're looking for reasons to go to the upside. Basically, I'm trying to draw an arrow. I'm sorry about this, but anyway, we were looking for reasons for the price to reject on our support, identifying a market pull up. So that was the core ways of trading the setup, which was good. So I'm just gonna move on to the next setup. So with this setup, it's basically almost the same concept, but this one was a bearish setup. So I'm gonna start from the 4-hourly time frame. As you can see, the price has just been going down, and when I analyzed this trade, the price was still within these areas right here. That was the current price at the moment, so let's focus on it. So I'm just gonna zoom in, and as you guys can identify as well, we had a down movement like that. Here we had a corrective movement right before this continuation movement to the downside. So that's fine. You know, our job is to identify the correction so we can base our trades off it. So in this case, we had this big correction right here, where we had our support right there with our resistance at the top, which gives us a nice bearish structure or correction. And same principles apply right here. As you can see, when the price is in a downtrend, we wait for an impulse and then followed by a correction, so we can place our trades off the correction while anticipate the down movement. So in this case, you can see here we have a resistance, and if you pay attention to the touches, you can actually spot that we only have 3 touches. So remember, third touch, which is this area right here, third touch has the highest probability, so we need to pay attention to this highlighted area. But we're going to continue and check that out in the smaller time frames, in this case the 2-hourly time frame. And as you can see, the price was just being choppy. The price was just going sideways, and this is a bad thing, because you can't really evaluate where the price is going to go. So in this case, your only option was to either wait or risk. So I don't trade according to risks. I risk the minimum, and in this case I was not willing to risk while knowing that this is bad. This price behavior is not the one you should be looking for into placing your trades. So I waited that out, and the price started trickling to the downside. So the price moving away from this trend line to the downside gave us a bit of confidence that okay, we are still going down. So my job at this point is to figure out corrections so I can utilize and place my trade. So I'm gonna scale down to the hourly time frame to look at if we did have any structures to the downside. And from that point, from the third touch, you can see we didn't really have any great structures until maybe this area, but it's still not a nice correction. It's not very conventional, but if you can identify these structures and you have a good eye for them, you would have recognized this one as well, and through something like this. And as you can see, the previous high was at this area right there, which would have give you confidence that if the price reaches this point right here and it rejects, it's gonna be basically somewhat of a double top, right, to the downside. And this whole structure right here going to the third touch, I mean the second leg of the double top, is confirmation that okay, we are continuing to the downside. So we would have placed and paid attention to how the price behaves once it reaches this resistance. So in this case, the price didn't break the zone, which was good for us, knowing that it respected it and it's going to continue to the downside. So our job was to look at how the price rejects from this point. And as you can see, as it was reaching this resistance area, the bullish candlesticks just became smaller and smaller and smaller, and we started having bearish candlesticks, but the price was still fighting back. So our job was to wait for at least 2 or 3 bearish candlesticks to confirm that okay, we are indeed selling, to show some strength to the downside. And in this case, we had these 4 bearish candlesticks in a row, which to us was enough confirmation that we can sell this. So right after maybe 3, I would have placed my entry right there. So I would have waited for this one, and then the second one, which is this. Let me just zoom in. So we have the first one right here, the second one, and as you can see, this is quite a big one as well. And then we had the third one, which was smaller, but it's 3 bearish candlesticks in a row, which is happening at this resistance area as well as this resistance area, right? So that for us, we have this as our first confirmation or confluence, and this as our second confluence. And then remember our third touch principle, right? We have about this as our first touch on the resistance, this as our second one, and as you can see, this point right here forms our third point. So everything just aligns. So once again, I would have placed my stop loss right above this high, this wick, the highest point of the wick, which is right there. and then just scale down. And if I zoom out, you guys can see from that point the price just sold off dramatically. As you can see, that was about, currently that's just under 5%, which is massive. Even though this was like days of holding, let me just measure the exact number of days. So that's basically a month of price movement. It took long because the price is just going up and down, but the overall movement is, or direction is, downwards. But to be honest, I wouldn't have held for this long. I would have just waited for the 90% rule of the structure that we traded, which is about over 1%, which is not bad. It's decent profits. So that is it with the setup. That was AUD against CHF. So this one is a bit interesting because it is still currently forming, but I just want to show you guys how it looks. So once again, I'm not gonna scale up to the daily time frame. I'm gonna kick it off in the 4-hourly time frame. This is the British pound against Canadian dollar. So you can see once again uptrend, and it's giving us these obvious highs, right? So we're gonna pay attention to those highs. I'm gonna draw my trend line just across like that. As you can see, it gave us about 3 touches on our resistance right there, and then we can go ahead drawing our support. So with this one, you can also, to validate the third touch as a rejection point, you can scale back and draw a horizontal line across from the previous highest high, and as you can see, it makes its way to this third touch right there, which means this is basically a double top right there and right here as well. And just look how the price got to this second leg of this double top. It got there correctively. And remember, a correction is either in an uptrend, it's a continuation, or it shows a reversal of the price, right? In this case, something like that, and the price starts turning from the third touch right there to the downside. So this is a reversal, and this is a continuation. So in this case, we're looking at a reversal as the price got to this high in a corrective manner. So we already know the direction of the market. Now it's time to figure out where we're actually gonna place our trades. So looking at the third touch, you could have entered right after your reversals. Please your stop loss right above the highest point, and the price never went back to the point, and you'll be in about just below 3%, right, in profit. So that would have been our first setup with this one. As you can see, the price from that point gave us a nice impulse to the downside, followed by this correction right here. So now it's time to focus on the correction, but as you can see, the correction is somehow not looking pretty, right? But the overall picture still looks decent, as the higher time frame structures look and align to a sell. So we're just gonna give this the benefit of the doubt, but at the same time sorry, we're gonna be protecting our account from losing too much capital in case this backfires and it buys instead, right? Okay, so we have this high right here, which we are currently reaching. So this could end up being a double top like this, and then we just go to the downside, or the price could just break, pull back by retesting and then go back up, right? So our job is to actually wait and see how the price behaves at this point, whether it's gonna reject, and then we're gonna be given the opportunity to sell off just like that, right? Okay, that's fine. So this is just a matter of a waiting game, and as you can see, if I scale down to the 2-hourly time frame, we're just a few pips shy from the highest point of this previous high. So the price could just the price could just give us a nice corrective movement to basically the third touch like that, because we would have this as our first touch and have this as our second touch and then our third touch, and then that's when we'll be comfortable placing our sell basically. But it's just a matter of time and the price evolving. We don't need to rush it, so let's just wait a bit and see what happens with this one. So that is it. If you guys watched this video till this point, thank you so much. Make sure you subscribe if you haven't. Hit the like button, leave a comment, and yeah, that is it. Make sure you wait for the next upload. I'll be giving you guys updates, and thank you guys.